folks, welcome to Pro Trader Strategies Market Commentary for Thursday, May the 27th. I'm Eric Wilkinson. Yes, you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I also talk about option strategies I'm implementing into my portfolio based on those assumptions I come up with based on my market analysis. For you, yeah, options can be intimidating, I'm not going to lie, but I've streamlined the process for you folks to find the best strategy for any given assumption. We don't just pick an option strategy out of a hat here at Pro Trader Strategies, being a bullish assumption I'm looking at a long call. No, we need to know what the pricing is in order to determine what our strategy is, because we need to be good stewards of our capital. I show you how to do that and spot those opportunities quickly in the webinars. We're doing one today after the close, so please check that out at protraderstrategies.com. Finally, smash that like button for me, please, right now. It really does help. All right, let's get on with the economic data. Across the pond, really not a whole lot going on over there, but here in the United States, it's the day I was talking about. Preliminary GDP coming in slightly lower than expected at 6.4%. Expected to be 6.5%. Now, we would like to see this GDP number ratcheting up if we are going to see inflation. We don't want to see GDP coming off and inflation going higher, folks. That is a recipe for disaster. So keeping an eye on that. GDP running a little bit hot. All right. So we're going to, inflation running a little bit hot while GDP is coming off. Not really a good thing. We're going to need to keep eyes on that. Unemployment claims, remember, really disappointing on the ADP numbers last week. But this week we are getting unemployment claims only coming in at 406,000, expected to be 427,000. No revision to last month's number, so lower claims better for the economy. It's the assumption that we make from it is that there are people getting hired and they are no longer needing unemployment. At a time like this, I don't think we have to worry about the discouraged workers so much in this scenario, because the economy is doing pretty well. All right, core durable goods. Remember, this is going to strip out transportation items. That comes in at 1%, expected to be 0.8. Last month's number revised up 0.3%, so that's a nice revision to the upside, making that headline number look even better. But remember, we're stripping out transportation, automobiles, airlines. And when you do that, that number is dismal, coming in at negative 1.3%, expected to be a positive 0.8%, so missing by over 2% there. Last month's number revised up slightly by 0.3%, but not going to make up for that headline number. That was causing a little bit of weakness, but then we started coming into the day. We got preliminary GDP prices coming in a little bit hotter. That's that inflationary. That kind of gave us a little bit of buoyancy, seeing that that wasn't as hot as I think most people were expecting, because this is a quarter over quarter on that. A little bit shorter duration, which is, that transitory inflation that everybody's worried about. Natural gas storage is coming in at a drawdown of 115 billion cubic feet. Expected to be 105 billion cubic feet, so more of a build than what was expected. And finally, the big number. Remember, we've been looking at these housing numbers. We got pending home sales coming in at negative 4.4%, expected to be 0.6%. We've been seeing these housing numbers go higher. Last month's number revised down slightly also, but that big headline number just missing massively by 5%. People, that is huge. And we've been seeing these inventories start to rise. I talked about how people are going out there and throwing their house on the market, even though they aren't moving anywhere, not out of the town even, not even probably out of the neighborhood in some regards. So we are seeing inventory levels go up. We saw the interest rates kind of ticking up a little bit, or people worried about that. That could be putting people on the back burner. Remember, when we see prices going higher for the house and interest rates moving higher, that makes it even more unaffordable for the person who maybe have been looking at that home. It may have been in the price range. You see interest rates uptick. It could be kind of putting that on in situation where you might not necessarily be able to afford that. And then on top of it, this bidding wars is really exacerbating that issue of the prices going higher, unaffordability, all of those things. Today, we're seeing this number. We're going to have to see if this is a trend because that could be signaling housing bubblicious, right? We start seeing interest rates go up. That should cause housing prices to go down, folks. That's usually what we see with the levers and pulleys of the economy. And finally, Boeing coming out and urging its suppliers to begin investing in the rebound in air travel, basically giving forward guiding, boosting plane production targets, all of those things. That gave a massive lift to people like General Electric, who builds the some parts for the airplane, like the engines. It boosted Airbus, it boosted Boeing. So anybody really related to this field got an initial boom off of the upside. And that's really what's driving the Dow Jones Industrial Average to the upside, is the big move today in Boeing. And we'll talk about that here in a moment. With that drawdown, with that build in natural gas not necessarily affecting crude oil right now. We can see there's some buoyancy here moving higher. It is getting a little bit overdone to the upside, I think. I just don't think we're seeing the demand for the gasoline right now. All right, gold futures starting to roll over. Keep in mind, today we're doing a webinar on the long put spread. Is this a good candidate? Is gold a good candidate for trading the long put spread? Well, I'm going to discuss that and how to spot whether or not it is or isn't today in the webinar, because we look like we've got a topping pattern here in gold futures. Anytime you get the dojis and then a confirmation right afterwards is usually a pretty good signal as to a top here. And that's what I'm looking at, a move up there testing that Fibonacci we talked about yesterday. I said, hey, keep your eyes on this. We could be getting a little overdone to the upside on a swing trade. Could be setting us up to roll over to the downside. That's what gold looks like it's doing to me. So I'm also going to be discussing that today in the webinar. Anything where we can find a bearish move based on a technical setup. I'm going to talk about the technical setup, and then we're going to talk about how we find the best strategy for that technical setup. Bitcoin pretty much unchanged on the day. Bonds coming off, meaning interest rates are rising, going to make that even more so unaffordable to people as interest rates rise. That means that you have to pay more towards that mortgage for the same value house. All right. Nasdaq. All right, let's get on with it. Nasdaq unchanged, up 5 on the day, but that's unchanged for the most part. Leading the charge to the upside, Dow Jones Industrial Average up 140. I talked about this. This is based on basically Boeing being up almost $10 this morning at one point in time. E-mini S&P is making a charge higher. You know, a lot of this is a little bit concerning. We have extended to the upside. That means the momentum is moving higher. We got this value area higher. We're extended to the upside today on the open, and Boeing making those moves. That's helping the Dow Jones. That's giving a little bit of a lift to the broader markets. The tech sector kind of waning a little bit. But big news of Disney coming out and making a big move to the upside. So a lot of the Dow Jones stocks getting that sector rotation, maybe into the blue chips and out of some of these techs again. We've been watching some of this stuff happen and work itself out. And I've got a lot of opportunities for bearish moves, and Boeing's one of them. If you guys remember, I did Boeing based on the long call spread, call spread, not calendar. And on that long call spread, we've gotten that move higher. This chart setup that we're getting right now with this basically gapping to the upside and creating this doji. I pulled the ripcord on this trade, and I'm going to be looking at this trade for a swing trade to the downside now. The long put spread. I'm not seeing a confirmation at this point in time, but I think that's overdone to the upside. Roll back down to 225, which lines up with our Fibonacci. That would make this situation work out, or this strategy work out perfectly. So I'll talk about how to spot why we would use the long put spread in Boeing for this type of move, and why we wouldn't use something like a short call like we did in XLU, right, for a bearish move. I'm going to break all of that down for you today, so check that out. With this, sorry, I guess I need to talk about this trade and why I did it, when, where, why I did this. Boeing, if you guys remember, I did this based on a swing type trade. It took a lot longer to work itself out, but with today's move to the upside, I was able to get out for a profit, albeit not as good of a or as nice of a profit as I was expecting. I'm just happy to walk away from this on this move today with a profit. So having said that, if you guys remember, last month I went into the July and I bought the 245 calls, sold the 270 calls for that spread, and paid $8.40 for it. Now, making that move to the upside, I was really looking for it to go up there, test the all-time highs, or at least test the 50 Fibonacci. It looks like we're losing some momentum today. And based on those durable goods orders for the airplanes, things of that's not looking as good as what Airbus led us to believe. So I am getting out of this for a bullish move. I am looking forward to add a swing trade to the downside. But having said that, with that July 245, 270 call spread in there, I originally paid $8.40. I got out for $9.50. Or 50 cents. Not the best trade, but it was a winner, so I'm not worried about, it wasn't at the profit target. Did it go up and hit my profit target? Not necessarily, but based on a swing trade, I got the move to the upside. Now, based on the technical analysis, it looks to me like it is the time to get out. All right, and with Gilead, if we're looking at Gilead Science, you guys remember yesterday I was looking at this chart. We got a bottoming pattern right on that 50-day simple moving average, right there at the point of control. Well, today we're kind of getting a counter-opposing doji inside of a move. And I've talked about this time and time again. Sometimes these set up for a downward move. I was looking to get out of this because I don't want to get stuck right here at this point of control. If we're right here at this point of control, that theta is going to hurt me. So I want to get in and out of these types of trades rather quickly, especially when they start moving in my favor. With that said, it did move in my favor. It is looking like a good trade. I have not covered it yet. I was looking to cover it yesterday. Had a couple working orders in there to get out at 425. And that slowly got away from me as the market started rallying into the end of the day. And I haven't put an order in there to get out of it. I'm waiting to see how this all sets up, if this is a continuation pattern. So keeping my powder dry and keeping an eye on this one in Gilead, but I have not covered it. Boeing is the only thing I've done today so far, covering that call spread. And we're going to use it as an example for a swing trade today, I think. All right, that's all I got for you guys. Take a moment to go over to the disclaimer. Check us out at protraderstrategies.com for this webinar. We'd love to see you guys all there. The more the merrier. I'm going to make sure you guys are clear of concept before we get through with it. So hope to see you there. Last thing I got is please smash that or take that. Bye for now and take it easy.